A very good afternoon, everyone, and welcome to our quarterly investors and analysts meeting for Renaissance Services SAOG. On behalf of our whole team, we have both Rashid, the CFO, and myself, Stephen, the CEO, here to answer your questions. You've seen our results published, obviously, for the first quarter. We see that the comparison, as we'd intimated to you last time, we expected to stay on the same kind of level as Q4 of last year, which we've largely managed to do when you and definitely have managed to do when you take out the one-offs in Q4. This is because, as we told you, we're going into the year with a hiatus year, a transition year in our occupancy levels at Renaissance Village, Dukem. That is following our expectation, as we described to you last time. We've averaged around 7,500 during the first quarter. That compares with 12,500 the previous year. But where things are holding up well are through our other areas of business, whilst a slight tailing off of occupancy in the oil and gas fields in our PACs or Renaissance villages in the oil and gas fields fell to 87%. This is a temporary transition between one major contract and another in one of the major locations. And as we've explained to you, we've won the opportunity to expand those facilities with some temporary accommodation over 5 years, while our principal client there, PDO, develops its Manazil project opportunity in which we'll be participating. And the other big issue that's having a very positive impact in this year is, of course, the fact, as we've explained before, we've been through a full cycle of retendering and rebidding, which was extremely successful in both contract retention and contract gains last year, which enabled us to recalibrate the rates to absorb increased cost of doing business, that everyone understands what has happened in the last few years with originally the oil price crash before it bounced back, and COVID and other things that have impacted. So we come into our second quarter really full of confidence in terms of what lies ahead in this year, because whilst it will be that hiatus period for Dukem, there will be a start to see improvement in the last 4 months of the year in occupancy. There we have some specific one-offs as well as some new occupancy coming in, and we expect a full rebound to very high levels in 2024. So we have lots of things to be positive about, and it means that we're able to open up the questioning to yourselves with a degree of happiness and confidence in what is coming. Thank you very much.
I think Samir has a question. Hi, Samir.
Hi, good afternoon, gentlemen. How are you doing?
Very well.
Thank you for your call. I have a couple of questions. Could you remind me on the RSVD's current occupancy? And are you still expecting full year to remain weak in that 40% level?
So the current occupancy at RSVD stands at just about 6,000, and we see an uplift coming through starting from June. Having said that, I think we mentioned that we were following an operational excellence program, 6-point program at Dukem, to make sure we get more efficient and agile in running our operations. And these efficiencies will be taken forward as occupancy grows, and we see that we'll be far more profitable going forward as the occupancy grows at Renaissance Villages in Dukem.
Okay, so to be clear, so currently you are in the 38%-40% range, right? So you at what percentage level are you expecting to reach maybe by end of this year with the current scenario, like the new contracts or improvements you are seeing?
So, we've been at around 7.5 in the first quarter. We've come down to that sort of 5.5 to 6,000 level at the moment, and then this is coming back in the second half of the year, back above 7,500, and then we have some one-offs of some large influx, some of it short term, but substantially for enough weeks to make an impact in the year. So whilst we can't give an exact percentage, we expect the overall percentage to be back around that 40-45 over the course of the year.
Oh, that's very clear.
Sorry, and Samir, just to answer your question, we remain extremely bullish on Dukum. This is a short-term timing issue between demobilization and mobilizing of very large contracts, some of which you must have read are in the public domain. And that mobilization will take us to a very, very good level of occupancy as we can foresee.
Yeah, there are specific projects coming down the line, which is, what Rashid is referring to, that particularly will impact us in 2024. And I mean, some of these might delay slightly or whatever. That is the nature of these things. But, there are genuinely 3 steel projects that apparently are complementary, not sort of mutually exclusive and competitive. There are 2 cement projects, one of which is it seems very likely to go ahead in the short term, and one of those steel projects within this year will start up. The big one for us is Petchem. At the moment, the talk is of sort of further announcements around National Day and sort of first movements partway through next year. We'll wait for the absolute clarity on that, but that's another project that will require 20,000 people. So we then got some of our anchor tenants who are also in a growth mode. We have, Oman Dry Dock, which is a very valued anchor tenant of ours at the high numbers, and we see their continued success and how they're growing. Their floating dock has arrived. That is to be manned up now, so we'll start seeing the occupancy around that coming in. So there's a range of issues as to why we're confident on the supply side. The other issue that we have is, if you recall, we were struggling, and we put in, our chairman had put in a few of his statements over time, where we were seeing not everyone complying with the CSAD standard of accommodation to meet that UN International Labour Organization, and indeed Oman's own standards that the government wishes to see. And that is something that where some employers chose to behave differently. We've had significant verbal support from the chairman of OPAS, from CSAD, in terms of preparing for these new projects coming in, a real commitment that they'll be directing all projects to us, not approving camps and so on, because what they appreciate is that to attract the international financing, this is a minimum standard. This is not excessive. This is meeting basic human dignity, human rights, and worker welfare requirements we expect, and I think all good employers expect to see applied. And they also appreciate that, because they don't want Dukum or Oman not to be competitive. So it's about doing it at affordable rates, which is what Renaissance Village Dukum delivers, because it's economies of scale over a long period of time. And they are also seeing the intangible benefits that one gets from that, in terms of better safety performance, better international reputation, lower downtime for sickness, lower attrition rates, attracting more Omanis into the remote locations as they're developed, and so on. So there's a huge commitment behind us. So what we experience in the teething problems, if you like, of our first major project round, those issues are being dealt with in advance. So again, it boosts our confidence as to what kind of numbers we'll be getting when these projects come to fruition. Thank you.
Oh, that's very clear, Steve. Also, I have a question on the PDO. You mentioned about the new contract. Could you give me more clarity on that?
So, Samir, it's the same contract. So we have our pack contracts, and just to give it ballpark numbers, if you look at the whole oil field, there's about 30,000 people living there. That it'll go up or down slightly depending on sort of major projects happening, but that's a rough working number. Now, of those, 50% of them, 15,000, live in permanent accommodation for contractors. So our Renaissance Village brand, because we have 5 of the 9 permanent accommodations, because wherever you were allowed to win 1 on its own, we won, and wherever you were allowed to win 1 of 2, we won 1 of those 2. So we've got the maximum contract gains that we could have. So we actually supply over 50% of that 15,000, about 8,500 beds. And so we are being asked to expand our facilities by 2,654 beds. So that is happening now. And what that is a modular expansion, because it is intended to be there for 5 years. And so it fits into our financial model that the client understands that we'll be looking to recover capital investment with high levels of occupancy and so on in that expansion. And so that's what is giving us growth over these 5 years. Now, during those 5 years, we will have the opportunity to compete for the full 15,000 delta, because everyone in the oil fields is going to be moving into a permanent accommodation, other than the obvious mobile and hoist crews and seismic crews, etc., which by their very nature have to be mobile out in the field. So this is a significant growth in our existing business, A, on a temporary basis with what I've just described, and B, for us to be a competitor in which, as our track record shows, we expect to be a serious contender as those opportunities come through in the years ahead. But it's good to have this boost that we've got, an increased accommodation in different areas coming on in June, July, and August. So we're going to see that effect coming through quite quickly. Thank you.
Oh, okay, thank you. One more follow-up on that, PDO, because how is it different from that earlier Manazil project? Because that was the one which earlier, we were discussed a lot. Then they put it on hold. So how is it different from this current
so how it's different, Samir, is that what has been decided is that where existing packs are, so where we have 5 existing permanent accommodation for contractors, that these shall be required through the current concession period and beyond. So for us, the current concession period means until 2044. So that's very good news for us, which is why we were explaining to you last time, we're actually investing a 1.8 million real program in upgrade and sustainable investment to actually drive down our carbon footprint, improve our water and energy usage and other such initiatives, which we couldn't make that kind of investment without the assurance that we'd have that kind of long-term period behind it. So Manazil was looking at that and putting out a tender to create permanent accommodation, to rebuild existing client accommodation where some of their assets have become old and need to be upgraded and new. And wherever that other 15,000 are living in non-permanent accommodation, it would become Manazil, the new permanent accommodation. Now, that has been put on a back burner. It's not gone away. What has been decided is to get as many of those as possible where packs exist at the moment, to put in a temporary solution of expansion, because what that does is, A, it will be a good high quality modular building that meets all the fire safety and other requirements. It meets the minimum 4 square meters per person in the living space, etc. So it's an upgrade from some of the conditions that people are living in at the moment, and at the same time gives them access to all the essential elements of worker welfare, the medical backup, the recreation facilities, the good connections home, all of the good nutritious food and menu content that is a requirement of the PAC contracts and so on. So this is about getting as many people into that as possible while revisiting Manazil. Now, I actually have a meeting this week, so it's actually tomorrow, with the Manazil team, because they're taking the time to look at other models, for example, the Renaissance Village Dukum model, to see what lessons can be learned so that as Manazil comes out, it is producing a really optimum spec to make that expansion competitive and worthwhile. So it's not gone away. A big chunk of it is coming in temporarily, and the rest of it will follow as the Manazil tender is developed. I think on a timeline, this is not a 2024 issue. We might see something coming out in 2025, which we'll compete for. But in the meantime, we've got the growth that we've just described. Thank you.
Thank you so much for that.
Ambition.
Hello.
Hi, Vishen. Hi.
Hi, Bishop.
Hi. Good afternoon, gentlemen. Thank you, for the answers so far. I had a couple of questions. You mentioned the low occupancy and the reasons for the same at Dukum, demobilization and sort of a slowdown or a lower than expected ramp up in mobilization. I wanted to check, in terms of margins on the existing capacity that you have with your utilization of 6,000, are the EBITDA margins same as what you had sort of projected earlier on the 40% range?
So I'll take that question. What we've done is, I think Steve spoke about our operational excellence program that we are running at Renaissance Village Dukum, and I touched upon it in our call last quarter. So we've gone ahead and rationalized and made the operation a lot more efficient. So our break-even levels on EBITDA have come down to an occupancy of 5,000 and below, and we are PAT positive at an occupancy of 6,000. As I said, we continue to streamline our operations and contract compliance across the business to remain ahead of the curve in terms of service delivery to both our internal customers as well as our external customers. And we continually are monitoring each and every aspect of the income statement to make sure there are no surprises and we can forecast our revenues, EBITDAs, and at the PAT level with a lot more level of reliability and certainty across the business, not just Renaissance Village Dukum.
Okay, excellent. I'm glad. Yeah, please go ahead.
No, please go ahead.
No, after you, Steve, please.
I wanted to just take the answer in a different direction, not specifically your question, which Rashid's dealt with, is to explain the hiatus. What is this? How come we've got this gap? And is this something that we're going to have to expect in the future as a sort of cycles of boom and bust there? And it's not a bust because we've managed the downturn very nicely, as Rashid has eloquently described. When you look at our business model or the business model for any new industrial development, which Dukum is, it's got heavy industry development. It then has light industry development that will feed off the back of that. It's got tourist sector development along that fabulous piece of coast there. It's got smart city development to come in and around all of those things. So it's not much more than just the industrial city development that one would see historically in a Yanbu or a Jubail, all of which are still rolling on and accommodation-wise 40 and 50 years after they started. The nature of it is that your first project, usually a refinery, as is the case in Dukem, automatically begets the downstream projects one at a time that add value to the output of that refinery. And the only and that was the model here, and Petchem is supposed to have finessed in, as we now are seeing the downturn of the refinery, one would normally expect the build-up of the Petchem. And the reason the model works that way is the ultimate client, in this case, Oman and its partners now in Petchem, both the Kuwaitis and the Saudis, would be benefiting from the mobilized EPC contractor force that is then able to bring that mobilization competitively into the tension of the bid. So that's how the model normally works. Now, what happened? Two things happened in a perfect storm. One was the crash in the oil price, and the other, which then had knock-on effects to the prices of output products from refineries, and also COVID. And with those two things, the feed project for Petchem was put on hold, it was put on ice. And that has led to this hiatus. Now, the good news, we've all seen the announcement, it's coming, it's happening. And what we should then see going forward is not boom and bust, but peak and mini trough, peak and mini trough. That is what is the evidence of all such industrial developments around the world, and certainly in the region. And we expect Dukem to get back on track with that, with the new projects coming down the line. Thank you.
Excellent. Thanks for that answer, Steve. Now, the next question is with regards to the operating costs. We've witnessed the sort of increase in operating costs during COVID, and hats off to Renaissance for the role it played in supporting the economy and whatever it did in COVID. Post that, those costs would have gone away, and you've been working extremely hard to trim down costs. Could you put a dollar value in terms of the savings that you anticipate on a normalized year in the operating expenses based on all the initiatives that you've taken, or at least give us some sense as to what savings we're looking at?
So the savings we're looking at is not just on people, as you're mentioning. The saving is across the board. It's more, I would term it as operational efficiencies that we're driving across the organization. In terms of administrative costs, we are beefing up our C-suite. So we've got a new chief people officer, a new chief commercial officer, chief communication and marketing officer, chief facility management officer. While we become efficient, we are also improving our ability to cross-sell within the businesses that we cater to. So the dollar value as such, I would not allude to because it's future looking, but we can rest assure you that you will see the benefits of that coming in the next 3 quarters. There are several initiatives that we are driving across the organization, and at the same time investing in heavy hitters and senior people to beef up the organization to be ready for future growth and cross-selling opportunities, firstly within the people and the clients that we cater to, and look at outside opportunities where we are not present at the moment.
Yeah, and to add to that, Bishan, there's a danger when we sit here as members of the management team and say, look, we've found these savings and we've reduced this and we've reduced that. It almost begs the question, well, what were you doing before? Now, the reality is that there is always a continuous improvement drive and finding better ways to do things. Now, we've also, in addition to the new colleagues who have come onto our team, and that, as you can just see from the list of what they're doing that Rashid's described, that is a growth agenda. And we've also still got a big focus on the efficiency agenda. Now, for that, we've also brought in external consultants who are working with us on the operational excellence program, doing time and motion studies. What a better thing. What are best practices? I mean, a whole thing of our Renaissance 2.0 is not just making sure that we're up to date and competitive with the rest of the world in what we're doing, but also what is happening in the future. So a lot of this look at future-focused innovation, looking at AI, looking at robotics, looking at automation. What are those things that are going to make the jobs more interesting for us, the experience better for our customers, maintain that market leadership for ourselves? All of that is part of 2.0. So it is difficult to just put a dollar number on it, and I know that that was your essential question, but it is actually, it's not a finite thing. This is a continuous improvement thing. Some of it will, in the end, as we get more competitive, goes back to our new clients, because it makes us more competitive on new opportunities that arise. And those new opportunities as well are in different sectors now. We've really diversified in terms of our waste management and utilities. We're currently participating in a huge utility opportunity in this in Oman, in our home base country. And these are things that have different margins. They're slightly different businesses. It's still owned within our single word of services or our 2 words of services solution, but they're all great opportunities. And so the dollar differential will be different depending on the actual spread of the different businesses that we're in, because the EBITDA levels are slightly different in all of them.
Understood, noted. Thank you for that. If I may then just ask a slightly different question, if you could answer that. Rashid, you mentioned that the operational break-even is 5,000 in terms of occupancy, and PAT would be at 6,000. Now, if you were to compare this 12 months, 6,000 is PAT positive, and 5,000 is break-even level, correct?
Yeah, EBITDA positive.
EBITDA positive at 5,000. If you could compare this with 12 months ago, what was the occupancy number 12 months ago compared to 5,000?
So if I were to just take a guess, that would be at 8,000 PAT and approximately 7,300 on the EBITDA level.
Yeah. Excellent, great. Yeah, that's an apple-to-apple comparison. Great, fantastic. On last question, sorry for taking so much time. On the waste management services, if you could just give us an update on how that's progressing.
So I'm sorry, please don't apologize for taking too much time, Bishan. Your questions are always great, and it's great to have you on the call with us. So the waste management is, remember, we have sort of 3 elements to it of what we've won. In the privatization of waste collection in the country, which is managed by our client FIA, there were 7 major contracts. We only became successful on the 7th one, and so we broke into that, and we sort of have that 7 to 8% of that market. But they're 2 good contracts. It's for the CZAD area, which is hometown to us in Dukkam, and it's the Al Worcester area, which is a really tough one because there's, everything is so spread out apart. It's sort of nomadic and spread over a large geography. But I'm very pleased to say that our client is delighted with our KPIs and how we're performing on that. And we're just about to see the cycle restart on some of the waste collection contracts coming back out to tender. There are others, I mustn't get ahead of myself, there are some existing contracts where the client is looking at renewing with the incumbent, where, as I've just described, those companies that are hitting very high KPI performance, which we're in that category, I'm happy to say. Now, and the other thing that we've won is the PDO concession area, although on our ICB side, we outsource a lot of the collection there to local community contractors, although they come under our auspices and coverage and protection of our safety systems and so on. But what we're self-performing in that, and has been where you saw a big boost exactly this quarter last year, was when we did the dump site clearance, finished the project at Carnarvon, and we're going round doing all the dump sites, and we're getting rid of all the old hazardous waste, recycling as much of it as we can, and you're seeing a real transformation as you go around the different PDO dump sites. Now, at the moment, we are the only company providing that service in Oman, because that's the only contract of that nature, and that's where there's going to be more opportunities going forward. As the waste management sector starts to put out more existing landfill site clearance and recycling, put in more a whole sort of recycling projects and opportunities, waste treatment project opportunities. Now, there's no clarity at the moment as to when these opportunities will come to market. They're working on it. It's part of the privatization program. It's part of the program of the country's own goals to get to net zero. So there's a huge growth opportunity here, because it's not in the market at the moment, and we stand ready to compete for that, having really learned our trade well in this smaller piece that we've won of the waste collection and, as I say, dump site clearance. So that's where our waste management is at the moment. Good performance with a small market share, with significantly increasing opportunity coming down the track in the coming years. Thank you.
Thank you, Steve and Rashid. Have a lovely day. Thanks for answering my question.
Thanks a lot. Abbas has a question. Good afternoon, Abbas.
Good afternoon, Rashid. Good afternoon, Steve. Thank you very much for the call. Just a quick one. I was looking at the Renaissance sort of revenue breakup that you used to share, I think in 2021. I think from 22, you stopped sort of giving segment breakup. So now the problem area seems to be Duqm, right? In terms of, when I say problem area, I mean that, you were at a 13,000 occupancy, I think a couple of years ago. That seemed to have been the peak occupancy, and that's the time you were expanding capacity. Now that's fallen to like 4,500, 5,000 right now. Now, in the past, I was actually thinking about the chairman's statement in many reports, and Steve, you alluded to it today, where you said that, one of the challenges was that even when things were okay in Duqm, there were sort of subpar accommodation that people were going to. Now, when you speak about these big projects sort of coming in, have you become more competitive when it comes to day rate, or you're just hoping that at some level the government's going to do the heavy lifting and encourage and force these guys to sort of be out of the market? And so what makes you confident that occupancy levels will go up if it's because it didn't really help in the past, right? These guys were still providing subpar accommodation. So I'm just trying to figure out, because we've been in this situation in the past. And we were at 13,000 occupancy, and I remember many times that the chairman spoke about this. So what's different this time?
So thanks, Abbas. I really appreciate the question. And I just want to correct one thing. We're not at 4,500 to 5,000 occupancy. We're 5,500 to 6,000. Just to make sure you don't sharpen your pencil too much when you're judging that one. What is different this time? So one thing that has never been different is you cannot find anybody in Oman's government and in the different authorities, and there's lots of authorities responsible for making sure that compliance is there for good worker welfare standard, which is what the government wants to see from cabinet down and across all the responsible organizations, whether it's the Royal Oman Police for good fire safety, whether it's the municipalities and public health officials in terms of good food hygiene and safe food practices and so on. The environmentalists. There's so many different authorities involved in this and getting this right, through to the Ministry of Labour, who wants to see people properly looked after, through when we talk of the migrant workforces, the embassies of those individual supply countries, etc., wanting to see their people properly cared for. So that you cannot find anyone to disagree with the solution that we've put. Everyone is delighted with that solution in Dukem. Now, your question was, how can we be sure that we can be more competitive this time? Now, our premise is different from that. Our premise is that we are already super competitive if you apply the standard. So if you apply United Nations minimum worker welfare standard as adjudicated by International Labour Organization, which when you look at CSAD standards, they're very much aligned with that. This, there might be one or two slightly higher, but they're pretty much the same. When you look at major companies like OQ and so on, look at their standards, very much the same. You'll get slight differentials that a company might still have the 4 square meters per person or the ratio of 1 to 10 on ablution, but and the requirement of medical and recreation and so on. But they might say we have a limit of 4 per room or 6 per room. It's those kind of things will be individual authorities and companies wanting slightly different thing, but using all the same measures. And what was proven is that our point price at Dukem is cheaper than building a temporary facility for the duration of the project that has to be set up. You have to put your CapEx out to do it, and you have to remove it and put the site as it was and hand it back at the end of the project. Because we actually provide those kind of services elsewhere, where there are no permanent accommodation solutions. So we were able to bid, when we were building Renaissance Village Dukem, we were able to bid to the EPC contractors for their alternative of having their own compliant camp. And these are, good high-level international contractors, so their own specs are meeting that standard, etc. And that was more expensive. And that's why all the EPC contractors signed up and stayed with us, indeed are still with us now. One of them is just extending, which is a few hundred people, it's not a huge number, for 18 months, because they've got additional work to do at the refinery. And they are choosing to stay at Renaissance Village Dukem because the standard is higher and the price is competitive and cheaper than the alternative of setting up your own. Our problem was that we found ourselves competing with people who were not applying the standards. You ended up with, and it happened, there were some approved camps that were reasonable, reasonable conditions, but not meeting the standard, not having the recreation, not having the medical backup and so on. So that you can't compete with, that I grant you. It has to be a level playing field. And when it's a level playing field, we are more competitive than the alternative. If people choose to cram workers into 4-bedroom villas with 100 people getting off 3 or 4 buses every night, we can't compete with that. I accept that. And therefore, it's a double-edged competition. One is winning the argument with employers that actually this is good for you, this is good for your business, and it's good for your people, and it's good for your reputation, okay? And it's affordable. And the second is we don't have to win the argument with the authorities for enforcement because they all agree with us, and this is what they want. But what we do have to do is to align those miscellaneous authorities as a unit to ensure enforcement. And I think that's the difference, because nobody amongst those authorities wanted what happened before to happen. It did. And once something is out of the bag, it's difficult to get it back in. That everyone is aligned this time to make sure that that doesn't happen again. And we have to be vigilant with that. We've got a lot of support from the authorities this time. We've got a lot of support from the principal owners of the projects that are coming down the line, that yes, we want to ensure that that doesn't happen again. So that's one part of it. My answer to you, Abbas, is we're already competitive. And what is required is that the standard is enforced.
And Abbas, I think I'd like to correct, Dukum is not a problem for us. It's going to be the biggest opportunity.
So actually, my second question was going to be about the Dukum opportunity, because when I look at your minority interest, I'm looking at 111,000 riyals. Now, this is the profit contribution from Dukum to, largely is it the Dukum contribution to minority holders in RSVD? Is that fair?
Yes.
I'll tell you what
I'll explain that the contribution to the total revenue of the company, as you can see with the occupancy declining, has had an impact on that contribution, which you can see in the minority interest.
Correct. So because I was looking at the minority, because I don't have segment for Dukum, I don't have a segment breakup. So I was trying to figure out what sort of total profitability is Dukum at, right? Just based on this minority number, so now, you, Rashid, you and Steve spoke about, the various cost-cutting measures that you've gone through, not just in Dukum, across the company. But if we just address Dukum for now, and if I just go back in the past and look at the minority interest, Dukum was generating close to 4 to 4.5 million riyal, is my estimation approximately. At a time when you were, at peak Renaissance occupancy was around 13,000 in Dukum, is what I remember. So now, given the sort of progress you've made on the cost cutting side, if occupancy were to go up to the similar 13,000 mark, what sort of profitability are we looking at from the company?
Well, Abbas, you please do tell us. You're clearly way ahead of the game, but you're absolutely right with your judgment. That is the place to look to get those guidelines. You can see, the fact that you've pointed out that Dukum is still profitable. As we sat here a year ago telling you what the break-even numbers were as the occupancy was expected to tail off at the end of this, we were not expecting to be profitable at this level of occupancy, and we are. So yeah, you can definitely, do your pro rata calculation back up again, and you can get a rough idea that what was already a significant contribution when we were at the higher levels of occupancy will be even more significant this time around. And the second piece of that, because of the discussion we've just had about we didn't get the full occupancy that could have been there, this time around, we are anticipating that we will. So you can see why we are positive about Dukum and expect it to make a significant contribution. And once Dukum gets into its stride of project begets project, and remember, each project leaves behind a residual permanent workforce, usually smaller than the workforce required to build it, but nevertheless, adding to our permanent base that you see that we have around 5,000 odd people permanently at the moment, then you will really see Dukum on a regular and consistent, sustainable contribution that will be significant. And now we're seeing that we're about to grow what is already our contribution from the PDO and oil and gas fields as well. Then the next piece is, how do we turn the success we've had in recalibrating our services business into more growth as well, as we drive down costs through operational excellence, costs through future-focused innovation, and so on. It's cost down and standards up is what we're constantly trying to do. It is not a mutually exclusive equation.
So, Abbas, I'd already told you the measures around ops efficiencies that we are taking, is making us stay ahead of the curve while providing the best service to our customers, both externally as well as internally. And you will see the profitability levels actually deliver as occupancy grows, and which is why I said, don't call it a problem, call it an opportunity.
It's been a problem for us investors, actually, not.
No,
But
I
I
don't
but I
think-
I take your point. Of course, I
Doesn't
take it.
sound like it about.
If I just reflect on reflect on your balance sheet, I've seen a lot of good movement on the loans. Obviously you paid down 13 odd million, I think, in the last year, and you continue paying down loans. So what sort of sustainable leverage do you? Because Renaissance is one of the companies that actually knows what efficient capital allocation is. So leverage is not a bad thing. What sort of leverage do you feel you'll go and stabilize at? Because the reason I'm asking that is, at some point these cash flows can come to shareholders, right? At some point when you feel like you've reached optimal leverage. So I'm just trying to figure out that.
See, as part of treasury management, what we do is we strategically evaluate the excess cash flows, whether they can be reinvested to provide better returns to shareholders. And if a suitable opportunity exists, then great. If not, then deleveraging would be our next best option. And why we do that is to be future ready. Should we get a massive opportunity, we can again leverage our assets and raise capital, not to miss any opportunity. So at the moment, since it was COVID and it was a hiatus here, we've decided to go ahead and pay down 16.6 million in terms of loans and bring our leverage down in order to be future ready. And that is our policy across as we go. And like we have the opportunity of investing in the temporary accommodation we're building out for PDO, we've decided to do that with internal accruals because that gives us a better return, which we can give to the shareholders.
Okay.
And in terms of that sort of war chest that Rashid is describing, in terms of being ready, future ready for opportunities as they occur, we as we've demonstrated at Dukkam, is we are very open and now experienced in terms of sharing the ownership of the assets with fellow shareholders. In that case, sovereign wealth fund, a pension fund, a financial institution, and local community investors. And so, we feel that we're getting a really great balance of, and they've been fantastic partners with us. And even though we're sorry to see, obviously with this hiatus year, they're also seeing the effort that we're putting in to make sure that we're not going into losses in this year. We keep staying above the plimsoll line, and while other parts of our business take up the slack. And but it means we're open to opportunities where others invest in the property or co-invest in the property as well. And whilst having the firepower to be the front investor or have skin in the game at whatever level is required. For example, and when I talk about projects that we're looking at, it doesn't mean that we will definitely win them, etc. But we're always try and be as competitive as possible. At the moment, we're looking at a PPP project in Oman. Now, in this particular case, the co-investor is more interested in being providing the capex for the project, but to be able to win the project with the capability of 25 years of operation coming from Renaissance. And so we've joined in a partnership there, and we will share the benefit of that operational period if successful with our partners there. But in that instance, we're not having to come up with capital, although absolutely prepared to do so on merit if the numbers were right for us, and required to do so. We have a similar opportunity that we're looking at in Iraq at the moment, where the partner wants to own the facility, but wants us to be their long-term IFM partner in providing the services. And those, of course, are great additions for us when we get a pure service play that isn't just a typical tender of 2 or 3 years that you're going to have to come back to market and compete on. But with clients who are looking at that long-term integrated facilities management partnership, where you can drive KPIs that are around sustainability, that are around positive local impact and so on. And that's quite interesting where those projects are going. And at the same time, would we be prepared to invest in the CapEx side of it? Yes. And as Rashid has just described, we're ready with that, with what's been done in the treasury management. Thank you.
Okay, thank you for that. And if we just exclude Dukum for now, because I mean a lot of the conversation has been around Dukum, but if we exclude that, you gave us some color on the PDO packs, and and that's been okay. You're growing there. On the contract services side, all your major renewals are done, right? There's nothing big that's coming up for tender that we need to be nervous about. You guys are good. You've got a good sort of order book visibility or backlog visibility now.
I was just going to touch on that. The order book, one thing we worked on is to build an order book, and our order book and the order backlog is looking really, really good. Whilst we do not discuss individual contract metrics, we can assure you that every contract that has been renegotiated and re-tendered and re-won is a win-win for both the client and ourselves. The contract book, the contract order book looks great. I don't think it's looked as good for a few years. So I can give you that confidence that we have a lot more confidence in the reliability and certainty of the revenues that are coming through.
And to answer the specific question, Abbas, although I'd like you to rephrase it, because you said, what do we need to be nervous about? And then no need to be nervous, but we do have one contract which has been extended in each of the last preceding years. It's an oil and gas field contract that comes up for a full tender this year, which we will be competing for. And in that particular instance, as is often the case in this market, because we lead the market here, we are the incumbent. Now, the good thing about that is we have incumbency advantage. And when we do have incumbency advantage, I don't like to talk too much about live tenders. It's not live yet, but when it is we're very fair to our clients and make sure that whatever can be passed on, whilst keeping ourselves competitive for the new term of project, will be done. So there's one of those. Similarly, there's another opportunity that's not come round cyclically for a while, that we're not the incumbent on, that we're also going to compete for. Now, in that particular instance, we have a competitor who has that same incumbency advantage that I'm describing in ours. So, but we hope to be aggressive and compete. That's where we have to bring in our sort of newfound competitiveness as we drive down costs and drive up standards in our other operations, bring that to bear in new tender opportunities. So there's one that's up for everything else is secure. And there's another bigger opportunity to go after as well. Whilst we're never complacent and we don't assume that we will automatically be a winner, we don't feel you need to be nervous about it.
Thank you. My last question, Steve, is on the treasury shares. I mean, you've held it for a while. Is there any sort of plan with this, or I mean, can we see someone buying it at $1?
Oh, sorry. No, as has been explained in the past, treasury shares they're either used for M&A opportunities. It could be used for private placement. It could be used for anything, but they sit there. We can use it as collaterals. So that's our backup plan should something very large come up. And surprising that you asked that. There could be M&A opportunities where it could be used. They could be used. So I hope that answers your question.
Yeah. Thank you. Thank you.
And also, without, as we always say, we don't manage share price, and that is a matter for the market, and we'll follow that and respect that. While, as Rashid said, we have no plans to dispose of treasury shares or anything at the moment. We are of the opinion that this would not be a good time to do that when we see what is coming down the track. And so the answer is we don't have plans now, and we don't envisage having plans in the coming time, because we are expecting whatever the market decides on our share price, performance is what we can see. And on that front, we are expecting good things. And that usually equates into how the market values us.
Sure. Thank you for that. Thank you for your time, gentlemen. All the very best for the rest of the year.
Thank you,
Thank
Abbas.
you.
Let's see who else. Okay. Just scroll down there. Vipul. Hi, Vipul. He's muted.
Vipul, you're on mute.
Vipul, you're muted.
It's audible now?
Yeah.
Hi, good afternoon, Mr. Segan, Mr. Rashid. How are you? Yeah, I have only one question. I heard recently you have participated in this new contract which is floated by NAMA for meters in Taos. You have participated in tender.
Yes.
So can you put some light on the same? What is the progress and how it will be benefit to the group? What is the like possibility of getting the award?
Yeah, so Vipul, I really have to be very careful. We both have to be very careful in commenting on a live tender. But let me tell you what I think is already in the public domain. And then you can sort of work the rest out for yourself. So first of all, this is a significant tender that requires the rollout of 1.4 million smart meters. And the tender is for 8 years plus 2. So it's likely to be 10 years, and it actually has a 5-year option after that. But the initial period is an 8 plus 2 and sort of an automatic plus 2 before a renegotiated plus 5. And so it's a significant opportunity. And the tender is broken into 4 zones. Zone 1 is the Muscat capital area zone, which itself has 3 zones. And you may recall over time, we started with one of those 3 zones when we first diversified into this, and that was in about bill delivery, collection, and so on, and as well as troubleshooting and reconnection services and so on. And that then became a second phase tender, which was for smart metering, which we won. Only this time, again, the client was extremely happy that we had met the highest KPI performance in their portfolio. And for this reason, they gave us, as well as our competitiveness in the tender, all 3 zones. So we are now 100% that Zone 1 of Muscat. So we're the incumbent there, which has some advantage again in this particular opportunity. Although there's a significant additional amount of work and new skills required, as well as new training and upskilling of the Omani workforce across not just that zone, but all 4 of them. And the other thing I can tell you is that there were 23 bids. Bidders, not bids, excuse me, 23 bidders in the field, many, international and so on. As we see it now, there are 3 bidders left standing, and I'm happy to tell you we're one of them. And we respect our competition, and we respect our clients, and they will be doing their evaluations and so on. The other thing that I could tell you is that we have partners in this tender for and I'll just mention the main one, although we have telecom partners and so on, the local, but we've got significant local content in ours because this is a Renaissance-led and owned bid. But our technical partner is Tata Power out of India. And so they will be there in terms of technical solution, in terms of supporting the training and upskilling project for our Omani team who will be working on this. And it's a live bid right now. And so the rest we have to leave unspoken. But it is of significant scale. It is reasonable to expect that the client may wish to apportion it between more than one winner.
Correct.
1, 2, or 3. But, you know, we stand ready. We're capable, as my colleague has just described, with the financing for it, because this is an OPEX model where we would be financing it over time, and over the 4 years. But the income starts coming in as you finance and go along. So we're ready. We stand ready, if successful, to do all 4 zones. You know, it's 100%, but would expect that it might not come in that way. It might come as 2 zones or 1 zone, depending on the way it goes. We very happy with the technical bid that we've put in. That's the bit that's being evaluated at the moment. They're not opening the financial package until they've done the technical assessment. We are quietly confident that we will be coming through the technical assessment, and then we're in the competition on finance.
I think Vipul is only interested in coming to the office now.
Absolutely. Okay.
That's as much as I can say, Vipul. I'm sorry I can't tell you more. I mean, it'd be great if next quarter we're able to give you all sorts of numbers surrounding it, but let's see.
No issue. Good.
Another question. Abbas, you have another question?
Andrew.
Abbas, I think you're muted.
Yes, thank you. I was wondering if there's any update about the PPP school project, because I remember last year, I think somewhere in July, you guys were one of the 10 qualified bidders that would go on to the next round. So is there any update on that? And are you going to sort of do it alone? Are you going to partner with someone? Because it's just because of the construction side of things. Does it make sense to sort of do it with someone else? And, you know, if there's anything else we can expect, when can we expect something?
Yes, it does, Abbas. And when I say this is a live tender, it is a live opportunity. The physical tender hasn't come out. That's coming now in July. But we are already aligned. We are aligned with a very strong investment partner that has success. So this is 42 schools, 40,000 students. And we have aligned with a Saudi partner who's an investor who has already successfully won and invested in very similar school PPP projects in the Kingdom of Saudi Arabia. And they're very keen to do that here. We have another partner who is a local leading construction company who'll do the EPC, and we have ourselves. And so in terms of the share of that, we will be 45% shareholder. The Saudi partner will be 30, and the delta of 15 will be with the other part, with the EPC partner. We will, in that, have full control over the operation, which is for 25 years for those 40,000 students. And I have to say 40,000 and growing, because it will grow with the demographic of the country, but let's call it 40,000. Because of our physical control over that piece of the operation, so the SPV that we're forming in those percentages with those partners for the operation, we will be allowed to consolidate. So we will be the lead partner in the SPV for the operation. whilst the lead partner and sole investor will be the Saudi partner for the actual CapEx, the revenue will come back in those proportions. So we would expect to have our share of that for the 25 years if successful. So that's where it's at. It's no, what is very clear is we feel we've got a great coalition and we're definitely going to compete. So then more next time, when the bid's gone in and we get any other information back. That's probably as much as I can say about it at the moment without giving away competitive information.
Thank you very much. I appreciate that. Thank you very much.
I think we put out another question.
Hi. My next question is very small, related to the exclusivity for Renaissance Dukum. I heard that there is an exclusivity which is provided by CZAT. It is still there or something?
Yes,
change?
yes, Recall. So this exclusivity originally, it's let me come to the end. This exclusivity runs to 2027.
Okay.
So it has another 4 years to run. And what is it for? Originally it was from till 2024, but because of what happened in the sort of issues of not everyone, of enforcement and not being able to ensure the enforcement, the board of CZAD felt it appropriate that they should extend it for us to 2027 to give us some kind of recompense for what had happened, and which we appreciate. Now, that exclusivity is as follows. It is that no one else should build, own, and operate accommodation on a competitive basis for workforces. So recognizing that the 100 million riyals that our shareholders put into Dukum was significant. It did not call the PPP project by name, but by any other definition, that's what it is. The private sector investing for the public good as a key enabler for the entire Dukum project, that should be rewarded with a minimum period of exclusivity to get us started, and that was for 10 years. So that 10 years has been extended, and it is that no one else should build competitively. Now, we've had problems of enforcement on that, because when we had camps that were approved but didn't meet the standard, we found that those camps, although their lease is very clear that they can only use it for themselves and cannot sublet, have been subletting. So there's been some leakage, if you like, of people actually having commercial interests in workforce accommodation, which is not meant to be the case. Now, again, we recognize what's happened, what is done, but we're really tightening up on this. Again, the authorities, we've been to OPAS and CZAD, assuring us that those camps are being removed at the end of the project period as per the agreement, the lease agreement, and they won't be coming back. Thank you.
Thank you so much.
Well, everyone, we don't see any further hands up, although so either someone else has already covered your questions, and as always, we try and be respectful of your time. We've gone a little over this time, but I think it was worthwhile with the quality of the questions, and we thank you all, as always, for your interest in our company. And we enjoy these sessions with you each quarter, and we look forward to talking to you again next time. Have a very safe day for the rest of today. Thank you all very much indeed.
Thank you all.